JD is one of the most popular stocks in the stock market, and today we're going to go over a deep dive analysis on them and figure out if they're a buy. Let's go. Hey guys, welcome back, and if you haven't subscribed already, make sure to hit that subscribe button down below. Now, JD.com is a popular stock like I just mentioned, and the reason that we're covering the stock here today is because in our Facebook group, Positive Investing, we actually had a poll to figure out what company to cover a deep dive analysis on next. JD won with the most amount of votes, which is why we're covering it. If you haven't joined that group yet, link in the description, link in the comment section. Make sure you join. We're almost at 250 members strong, so we'd love to have you on board that community. But either way, getting into today's video, we're going to talk about JD.com, talk about their competitors, talk about their financials, talk about their technicals, and figure out at the end of it if this is a good company to invest in for the short term and long term. So if you're not familiar with JD.com, that's the official name here. They're traded on the ticker symbol JD, and they're the second largest Chinese e-commerce company in China. Now they sell everything from computers to diapers to furniture to appliances, and they utilize AI delivery, that's artificial intelligence, with drones and autonomous technology and robotics. Now if you notice, I said drones, and that's right, they deliver by drones, and they utilize the largest drone delivery service in the world through their 515 warehouses that they have. Now, on top of using this as technology to benefit their efficiency and getting their products out to the customers, they're also working on autonomous trucks for driverless delivery, among the first companies in the world to do so. So as you can see, they're kind of at the forefront here of technology, utilizing everything that they can to be the most efficient company at delivering packages from point A to point B. Now their online marketplace, which is where you can go and purchase products on JD.com, has over 170,000 merchants as of April 30th, 2018. So this marketplace, of course, offers a expedited delivery service, and this is pretty much a 2-hour delivery window for small or medium-sized packages and a 3-hour window for larger items. And this is possible in more than 50 major cities, 1,000 counties and districts all over China. So if you look at the stats here on the right hand side, you can really see how determined JD is to really fulfill their customer needs. Now JD Logistics, which is the logistics part of the business, launched a new premium logistics service with China Railway Corporation, which is another company in China, to leverage domestic high-speed trains for secure long-distance transportation to high-end goods, and JD Luxury Express, which is their kind of luxury premium delivery service. And utilizing these trains actually allows them for same-day delivery for a lot of high-end products, which was not possible before. So they're doing, like I said, everything possible to get the customers their packages as soon as possible. Now, recently, if you haven't heard, Google actually announced a $550 million investment in JD.com with a strategic partnership with them. So as you can see, there's a lot of good things going for this company. But now let's shift gears and talk about some of the bad, which is their competition. So they have one big competitor right now in China, and when they expand worldwide, I'm sure they will at some point, they're gonna have another large competitor. So right now, as it stands, their main competitor in China is Alibaba, ticker symbol BABA, which is the largest e-commerce player in China. So in the last year, if we look at stock performance, Alibaba was actually up around 35%, where JD was actually down 3%. So this is a drastic difference in stock performance, and it's one of the main reasons that investors are hesitant about going ahead and making investment in JD, and which is why Alibaba is seeing a lot more attention. So if and when JD does expand to North America, of course, there's another huge company here. It goes by the name of Amazon, AMZN, who will be another big competitor for them. And just as a point of reference, in the last year, Amazon actually went up 73%. So this might be one of the biggest reasons a lot of people don't really want to get into JD. Not only are they up against Alibaba, which is a behemoth in China, but when they do expand worldwide, they're going to be up against Amazon, which is another behemoth. So there could be a lot more issues in the future because these large companies have more money to spend compared to JD, and that could actually cripple their business and start lowering their market share. And eventually, JD might have to surrender to one of these two companies. Now, if we look at what analysts have to say about JD over the last 12 months or so, 12 analysts are bullish, 1 is bearish, and 4 are neutral. The average price that investors that have given a price target here on this is around $41, which is roughly around where the stock price is today. So analysts don't really see too much more of an upside from the stock. But again, this is accounting from some of the prices from last year, like last September, for example, which had a much lower rating. If you look at the more recent price targets, you can see they're closer to the $50 range. So there's still a bit of upside that analysts see here. I expect if they continue to keep posting strong earnings and they continue to keep posting strong profits, which we'll take a look at soon, you will see a lot more analysts come in and start upgrading the stock, which will in turn push it higher. Now the technicals for JD are kind of all over the place here. If we take a look at the chart here, we can see that they had a long-term support level from around 2016, and recently in the last few months we actually broke past this level. Since then we've kind of come up and broken past that, but we weren't able to hold that, so we're now again below this level. You can also notice that we're below all of the moving averages, including the 200-day moving average, which is typically a very strong support or resistance level in the stock. In this case, it's acting right now as a resistance level. So if you look at just its performance in 2017, it's actually fairly poor compared to how the market did in 2017. And JD is pretty much in consolidation for most of the year. And this kind of goes back in line with investors not really believing too much in the company right now. But again, for the long term, you are going to see a lot more investors come in, bigger investors, especially since you see companies like Google putting their money forward and investing in the company. So a quick look at their fundamentals here. JD has a current PE of a whopping 299 with a forward PE of 33. So this current PE is absolutely ridiculous, which is another reason why investors are cautious on the company right now. So as comparison, their competitor Alibaba is a current PE of 51 with a forward PE of 23. So it's a lot more reasonable and a lot more in line with the market. Yes, it is still a bit overpriced right now, but its forward PE is more in line with where the market's forward PE is. Now, of course, JD does not pay out a dividend, and I don't think they will pay out a dividend anytime soon because they are working on expanding their business throughout China and worldwide. So a lot of the money that they are generating is going back into the business. Now, a quick look at their balance sheets here. I had to convert it from their local currency to US dollars. So if you look at cash and investments, they have around 1.61 billion US dollars. Debt, they have around 0.556 billion. So we have a cash to debt ratio of almost 3. It's around 2.896. So JD in general has a healthy balance sheet based on these numbers. And they have almost 3 times as much cash as to debt, which is what I love to see in a company. If you have been following me, you know that's something that I look for. Now here comes the fun stuff, which is the numbers and growth, which is what most of you come to this video for actually. So revenue, if we take a look here, has been increasing year over year, double digits year over year, except for the last 12 trailing months. Now I expect this to start speeding up as we get more and more into the year. But as it stands right now, we are in single digit growth, but it's still growth nonetheless. Now net income is another one that you see growing rapidly. And in the last 12 months, it's grown triple digit percentile. So that's a massive, massive growth for the company. It has been growing almost 100% in the last 2 years as well, and 58% the year before that. So it's been very consistent with their profits and their net income. Operating income though did take a massive hit last year, and the trailing 12 months is actually putting this company back into the negative. As you can see in 2017, they did finally break even with their operating income. They did eke out a little profit there, but the trailing 12 months is a negative. But I do suspect that this year, as we continue moving forward and as China's economy keeps growing and the middle class keeps growing, this number will be even higher. And I'm expecting maybe a double or triple digit growth in operating income within the next year or so. Capital spending surprisingly has been pretty consistent over the last year. It did increase in 2017, but in the last 12 months it's been pretty consistent, which is good to see, especially since they have a lot of warehouses and all of other property that they have to manage and pay and all of that stuff. So it's good to see that they have their financials set, but I'm not too worried about this aspect because again, they do have to buy warehouses to serve customers, and they are going to have to invest in that, and that is going to keep going up as the business keeps growing. Finally, if we look at stock performance here, we can see that it was pretty poor over the last year. We did go down around 3.5%. The year before that, we were up 62%. The year before that, we were down 20%. Before that, we were up 40%. So this chart's all over the place. We're up and down. Like I said, though, I think this is because investors are still very hesitant on the company. They still think Alibaba will dominate the space in China, which is why they don't really know if JD is a good investment. And as you can see, the stock price is kind of reflecting that. Now, a quick visual here to understand what we just looked at, all the numbers there. You can see the revenue has been increasing dramatically year over year, as well as their net income. Their operating income, however, has kind of flatlined over the last year, and their capital spending has also been increasing, but like we just talked about, that's expected. The stock price, like we can see here, has been lagging, which is why this may be a good opportunity to get into. So now, finally summing this up and figuring out if JD is a buy or not, what I'd say is that JD has excellent partnerships with large companies. So they have partnerships with Google. They even have partnerships with Walmart through one of the companies that they invest in. And they have an investment from another massive Chinese company, Tencent. So if Tencent believes in them, Google believes in them, Walmart indirectly believes in them, I think we have a lot of support behind this company. Now, the biggest concern is their largest competitor right now in China, which is Alibaba, which is absolutely no joke, and you can't just ignore the fact that Alibaba is there. So JD really has to keep innovating, keep pumping money into the business. Their drone delivery and self-driving trucks is definitely a step in the right direction, and this could leapfrog them forward ahead of the competition, ahead of Alibaba, and potentially be the catalyst that gets this stock up and running. Now, they have a healthy balance sheet to keep them afloat should there be any unexpected expenses that certainly come up. They have enough cash on hand to kind of pay that out because they do have, like we said, a 3-to-1 cash to debt ratio. But their performance again in 2017 underperformed the market significantly. And like we just discussed, one of the theories that I have is that investors are kind of hesitant right now with a high PE, increased competition, everything. There's concerns even about the Chinese economy slowing down. So there's a lot going against JD, but I think once these things start ironing themselves out over time, that's when we'll see a lot of investors pouring more money into JD. That being said though, their stock price aside, they have had explosive growth over the last 4 or 5 years or so. The net income's been increasing substantially, and companies like Google, like we just talked about, is heavily invested in JD. Now overall, JD has really proven to me specifically that they can keep growing despite the competition, Alibaba in China. And I like the fact that they do plan to expand globally sooner rather than later, which means more competition, of course, from Amazon. But I think that by competing with Alibaba, they're kind of understanding how and where they can compete with Amazon when they do expand more globally. So really the bottom line here is that if you believe that China will grow as much as it's expecting to grow in the next, say, 1 year, 3 years, 5 years, 10 years even, then online shopping should theoretically grow at that rate or even faster as well. Now, if that does happen, JD will be one of the forefront players like we just talked about. It'll be JD and Alibaba really that'll be growing at that speed. And you can't really go wrong with either company as long as they're able to keep their growth going. So now, although my personal preference, if you watch my videos, you watch my stocks I own videos, is that I do love Alibaba and am invested in Alibaba, I would still consider JD a buy for me at current prices, even though they have a high PE, even though they have increased competition. I think that their use of drones, self-driving cars, and other artificial intelligence into their business is going to make them much more efficient than their competition over time, unless their competition also does this simultaneously. So as it stands right now though, I would say that JD is a buy for me. So is JD a buy for you? Let me know in the comment section down below. Don't forget to join the Positive Investing Facebook group, completely free. This is where we discuss stocks like JD, we discuss other stocks, we discuss things that you might be interested in, companies that you may be investing in. You can always post in there and ask us what we think of those companies. Either way guys, thank you so much for watching. Hit that subscribe button down below, but don't forget to invest.